All right, everyone, welcome back for another episode of Carnivore Trades. Today is Monday, July 22nd, 2024. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So markets here closing in about a minute and a half or so. And we had a pretty good rally and a pretty good bounce here. And again, this is why narratives are just not really good if you're a trader. And, presidential assassination attempt. President drops out a week later. We also had the biggest IT meltdown of all time. And spiders up 1%, Qs up 1.5%, IWM up 1.5%, and the Dow up 0.25%. Very bull configuration here with the Nasdaq and the Russell leading. So having them up both 1.5% is very strong. And again, like I said on Friday, bears have a legit window here, but you've got to be able to break this down. And I said, if nothing happens over the weekend, we're going to gap and go. We did get something happening over the weekend, but again, it's clear that this was pretty much priced in. It's clear a lot of insiders were aware of this. From the reports I've read, it's not like this was a surprise to some people. And what happens is you get event volatility, and again, you're going to learn again the hard way if you try to short into the lows. We were very bullish here. It was very, there was a lot of bull positioning, a little over bull positioning. It's probably why we got that downdraft into Friday. And, clearly some of that got washed out. As you can see here, the volatility index down 10% today. And let's see if they go and fill that fake print down there. Would definitely be something. But either way, market's good recovery, and still got work to do though. Bulls are not out of the window, out of the woods yet. We still got some earnings coming up. Obviously, Google, Tesla, and Visa, Spotify tomorrow. So some big movers here, and we'll see what we get with that. But right now, bottom line, we did close above 60, so that's a good sign for the market. We closed above the previous day high. Didn't quite take out this pivot yet, but we're still basing above support right now, and they actually tried really all day long to walk it back to 55.40. So there was Gex sitting there all day long. They walked it back twice, and the third time they were unable. So bulls holding up here. Next level to watch is 85 right here, and you can see that's a 50% fib as well. So right in this area, pivot low, breakdown, and that should be where the market wants to go and retest. So that's kind of what I'm expecting here. And again, bulls are not out of the woods by any stretch. Definitely, bears still have plenty of space here for a lower high, but you need to get to work on that. You don't want to let us, if we're holding up into the end of the week, I'm going to start saying things like clock's ticking again, which is what I said back here and, back in this area too. So just be aware of that. But, if the market can hold up into earnings, I think that the likelihood of a higher high coming, at least nominally, gets a lot higher. We do have the Fed next Wednesday. That's kind of the last real wild card. But, again, watch those levels, 85, and then, below 50. Things start to get a little bit more negatively configured, but I do think we want to go up and test 85 at the very least. A 50% retrace of a down move is totally ordinary. I'm just going to use the NQ here as well. Kind of looking for this trend line. It kind of got hit, but I'm kind of looking for, right into this area around 20,100, 20,135 for the Qs, triple Qs. It's right around 485, 485.50. So again, you can see the 382 area. Fib lines up with the pivot, which should line up with that 55.85 area on SPX. So those are the short-term levels I'm watching there, and you can see the Qs. Again, these trend lines are a little bit different because of the closing price of the cash versus the futures. Again, we sliced the trend line. We're back above it here today. And the same thing kind of with the spiders. We sliced the 20 MA and then right back above it. So big level here. And it was important to get defended, but lower highs for the bears could provide another opportunity for weakness. I also added this trend line here on the SPX daily, something else to keep an eye on should we go down into that area. But short-term bulls, doing pretty much everything they needed to. Why? Because the IWM was up 1.5, as was the Qs. And again, small caps, so high risk, and Nasdaq, higher risk. If that's leading, market's fine. I know everybody was dunking on the IWM for the last 3 days, but I mean, dude, you had like a 12 or 13% move in 5 days. So a 3% pullback is not out of the ordinary there. And on the weekly time frame, again, it's on breakout. If this can just consolidate this move, there's nothing to say it can't continue higher. So don't be a prisoner of the moment. Oh, the IWM was down, so it was down for 3 days. Like, yeah, and it was up like 15% in 5 or 6. So, the correction is going to be proportionate to the move. We're still above the moving averages, and this doesn't have any problems. That doesn't mean there can't have a lower high, but right now it's acting well. Dow, the laggard, which is fine. As a bull, you want the Dow to be lagging. You want the Nasdaq and the Russell to be leading. But right now, it did get a bounce. With everything else, as did the SMH, up 4%. So we got a slice at the 50, a little fake out, little bear trap. Again, a lot of this, again, speaking of bear trap, again, OPEX, right? It's not a coincidence that we just went right to 5,500 and then just stopped going down. We went down for 3 days straight and then stopped there. Again, you got to take this stuff with a grain of salt when you go into these OPEX periods. But SMH led the market down, and now it's leading on the way back up. So like I said, if the semis start to bounce, I said keep an eye on that. This is really the only index you need to watch. And that led to the upside today. Again, still plenty of room for lower highs. But I do think, I'm just going to say like 262 gets tested. And yeah, we'll just say 56 on SOX. So we can get there tomorrow if we want to continue to bounce this. By the way, Texas Instruments reports tomorrow after the bell too. That's a big semi. So keep an eye on that. IGV was really strong all day. Never turned red. I think it touched the flat line. Yeah, I think it touched the flat line, but that was really strong all day. Some of these other sectors were weaker. Look at Apple here today. It took a pretty good hit intraday. IWM and the Dow backing off. But yeah, semis and cloud never really went negative, and that's with CrowdStrike continuing down. I've got a million questions about CrowdStrike. I'll just tell you the level, and I'll just kill my own alpha here. But here you go. So 240 to 245. So 50% fib, and this big level right here for CrowdStrike. That's if it gets there. You're already into the weekly 50 MA. But watching that, but with that down as much as it was, you'd think the market would be down more, or IGV would be down more. But Adobe, Oracle, Atlassian, CRM, they're all holding up pretty well. Cloudflare was flat. ServiceNow up, so they did offset pretty nicely. Transports, again, up 0.75%. Not bad when you see the Russell, the transports, and the semis up nicely. Did dip lower here, but you got a higher low now. And you're above the moving averages. So transport's holding up. Another thing, here's another narrative that got destroyed today. It actually got destroyed in two ways. One is that everybody was telling me about the yield curves last week and how they're going to completely uninvert here and how we're going into recession. And yields were up pretty big today. So the 3-month, 10-year, 3-month was actually down a little bit. But again, all of the spreads here, they're still not really, I mean, you're getting a little bit of an uptick here. That doesn't mean they can't change, but not really. I'll tell you what, it's not coming from the short end, right? It's coming from the long end. 30-year up 2.6 basis points, 10 up 1.5, but it's really not even the fact that they're up, it's where they came from. They were down pretty substantially, and they rallied really hard. So again, they keep telling me about disinflation and deflation and all this stuff is the big risk, but today, 10-year and 30s, long end rallying. I've said this before. I said if the Fed starts to cut, look for the long end to go ballistic. Again, that doesn't mean that's happening just yet, but it's definitely starting to be like that. And the second side of that is that yields were up very substantially today, and that was another thing that couldn't take the market down. So again, forget the damn narratives. I'm telling you, just forget them. They're not helping you. Just follow price. XHB up 1.8. Again, good tail candle last Thursday, but this is still holding up. Inside bar action. 20 MA catches up to price. It can go higher. Same thing with VNQ, up 1% here today. If that consolidates this big up move, it'll go higher. XLF held up nicely, up 0.2%. KRE led the market higher here, up 1.6. Nothing wrong with that. Nothing wrong with KBE either. And broker dealers rallying as well. Nice inside bar there on the daily and good pop. So financials leading, semiconductors leading, transports leading, small caps leading. You tell me. All right. Oil here down 27 cents. Again, another thing that I thought was strange on Friday is that there was speculation of war and stuff like that. And we did get, there was some bombings that happened, but, oil down 3 1/3. You shouldn't expect that. Expect any geopolitical news, right? But oil down today as well. It did come off the lows. I'm not even interested in this until 75, 76. Again, it's just trying to get a bounce here, but I've just left oil alone here for a while. I don't really see a reason to get into it right now. XLE down 58 cents, but that still has plenty of room for higher lows, as does XOP, which is down 72, and then OIH as well. OIH is the best of breed right now. CCJ getting a bounce here off the 200. That can still get a higher low, and daily chart can fail a head and shoulders if it can close back above that trend line. So that's your positive there. Your negatives at the NM closed below the weekly. So not the best look there. The NJ did not. So you kind of have a split, right? CCJ is strong. NJ is still strong. And the RM or NM is a little bit weaker. So weakness there. But a little bounce today. Nat Gas got a really good bounce too. And we did close above 222. So this can squeeze up, I would say, to 238, 240. And if it really gets legs, we'll say 250 to 255. But you did close above that breakdown bar high and above these pivots. So positive there. And that might squeeze up a little bit more. I think the U was up a little bit more. So a little bit of contango there. Not a ton, but definitely a little bit firmer there. Yeah, this was up 5% versus, oh no, it looks like it was about the same. Yeah, it was about the same. But the chart still looks better though. But anyway, dollar index here, holding up today, down just 7 basis points, but no problems here. I like the reversal Thursday, continuation Friday, and a pause here today. So daily chart still just a lot of chop here, but the weekly still firm with the, I wouldn't say it's firm, but it's still holding that support level, and the monthly still holding up as well. I don't think this makes a decision until that wedge closes in September. So a lot of noise on the DXY right now. Gold here fractionally higher, holding the 20 DMA. I think this is something you want to be buying dips in pretty soon. Same thing with silver. You can say the same thing for GDX and SIL. Again, up nicely with gold and silver flat to lower. Platinum here down 1.3, holding the 200. It did slice this trend line. Remember, fourth hit generally can break. So platinum a little bit weaker here. Maybe might start to get interested in this soon. I know everybody's going to talk about a head and shoulders. I don't really care about that. I don't think it's that good. But no interest in it right at the moment here. The palladium here continuing to back up. This is why it's so hard to do TA on it. It's just so thin. So good rally above the 200 for the first time, and then right back down. Copper here continuing lower, but it did come off the lows. Yeah, it came off the lows by the end of the day. It got right into that big level on the weekly. So the weekly 50%. We'll see if that holds. I also heard a lot of dunking. A lot of people like slamming the one-sidedness from like Goldman and Zero Hedge. That like the articles came out for like copper shortage and all this stuff like up here. To be fair, it was very crowded up there. But there's a lot of dunking going on now, and it's like, why weren't you dunking on them the last 2 weeks, last 3 weeks, last month? So maybe this is starting to get near a low. It's definitely getting into an attractive zone. So I showed you that 50% fib we hit today. I mean, if you got down to that 200, I would be very, especially if we got there in the like next couple days, I definitely would be interested in copper in that area for a bounce. It's definitely interesting here. But, it's funny how that works. Nobody dunks on it until it's like, your chance to dunk on it was the last 2 or 3 months. And now you want to start taking victory laps. So that's where it starts to look like, okay, well, maybe it's ready to go the other way. Anyway, Bitcoin here holding up nicely. It is into some resistance though with this upper trend line. Could it break out? Yeah, but you also just went from 53 to 70 almost with basically no pullbacks. I mean, you went up here, went sideways. You had a 1, 2, 3 pullback and then a pop, but no real dips. Like it wasn't like a high or low type situation, right? So you didn't really do that. So I think it's probably not going to work. It's probably not going to break out. Again, the monthly I still think is just. I think it's got to do more. I just think this 20 MA's got to catch up. That's why I don't think it broke out last time. In 2021, it was just too stretched. But chart wise though, it's doing everything you want it to do. Just keep building a base here. Just do it for another 2-3 months. Because I think if you try to break out now, it's not going to last. I think it'll get yanked back. That doesn't mean it can't try. I just don't think it's going to last if it does. But good price action. What can you say? It's holding up really well. So, all right. Anyways, again, Q's really strong here. Russell really strong. Don't bet against the market when that is the case. You got the Russell and the Nasdaq leading. It's always a good sign. But we still got work to do for bulls here. Got to get through 85. We got some earnings coming up, obviously, but we'll see just how offside, how bad did the short FOMO get, right? Because people have been wanting to bet against this market for a while. Nobody believes in this rally, and that's kind of, I've done videos. I did a video on this over the weekend. Go check that out. It's on the channel. But it's the second we get a 150 point dip, looks like people got really bearish really quickly. Again, bulls still not out of the woods. Still got to get through some of these levels, 85 and then 56. But good recovery here, good bounce, and again, bears still have a window, but you got to get to work here and do some damage to this chart. First step being get through that 54.75 area and holding it at least for a few days. So anyways, guys, gonna wrap it up here. You guys take care. Come find me on carnivoretrades.com. Only if you like making money. I'll just see you guys all tomorrow. You guys take care.